It's 11:47 p.m. Your portfolio is open on the screen, down 14% in 3 days. You haven't eaten a real meal since Tuesday. You've been watching every tick, refreshing every headline, waiting for the market to make sense again. It won't. Not tonight. Maybe not for months. The S&P 500 just had its worst single-week performance since the pandemic crash. The Fed made a move nobody expected. A tariff announcement came out of nowhere. Some earnings report missed by 3 cents, and a company lost $40 billion in market cap before lunch. This is market chaos. And you're standing in the middle of it watching your money bleed, wondering if everyone else knows something you don't. They don't. But some of them know how to move inside the chaos. And that is a very different skill. Here's what they taught you. Stay calm. Hold long. Don't react emotionally. Time in the market beats timing the market. Good advice for the average investor in average conditions. But right now you're watching volatility spike to levels that only appear a handful of times per decade. The VIX, the market's official fear gauge, just crossed 35. That's not noise, that's a signal. And the advice to just hold starts to feel less like wisdom and more like paralysis. You're doing everything you were told. You're diversified, you're in index funds, you're not day trading meme stocks, you're responsible, and you're still losing money. So you do what everyone does in a panic. You check Reddit, you watch financial YouTube. You read 12 different takes in 12 minutes. One says crash incoming. One says this is a generational buying opportunity. One says gold. One says cash. One says crypto. Your screen is full of noise. And underneath all of it, the real game is already being played. Understand something first. Retail investors don't move markets. Institutions do. When chaos hits, the average investor panics and sells. That selling pressure drives prices down further. More panic, more selling. This is called a capitulation event, the moment when emotion peaks and logic disappears. The institutions are watching that moment like a hawk. Because capitulation is when assets get mispriced. A fundamentally strong company doesn't become a bad company because the Fed raised rates by 25 basis points. But its stock might drop 20% in a week because millions of retail holders are afraid. Fear creates a discount. Here's what sophisticated money does during market chaos. It doesn't try to call the bottom. Calling the bottom is a gamble. Instead, it uses a strategy called dollar cost averaging into strength. Instead of going all in at once, it deploys capital in tranches, buying more on red days, pausing on green days, staying patient. It also rotates. In uncertainty, money moves from growth to value, from speculative tech to essential infrastructure, from high multiple startups to cash-generating businesses with pricing power, utilities, defense, healthcare, commodity producers. These aren't exciting sectors. That's the point. There's a second move that doesn't get talked about in retail spaces. Options volatility. When the VIX spikes, the cost of fear goes up. Investors will pay enormous premiums for protection, for put options, for hedges. And on the other side of that trade, sophisticated players are selling volatility, collecting that premium, treating panic as a revenue stream. You're buying protection. They're selling it to you at a markup. And the third move, the one that really matters, is sector divergence. Every market crash looks uniform from the outside. Everything is falling, but internally, sectors are falling at different rates for different reasons. In 2020, travel collapsed. Cloud software exploded. In 2022, growth got slaughtered. Energy tripled. In every crisis, there is a reshuffling. And the investors who map that reshuffling early, before the narrative is obvious, are the ones who come out ahead. So you stop watching the market like a spectator. You build a watch list, not of the hottest stocks, but of the ones you've always wanted to own at a better price. Quality companies, boring names, things that will still exist in 15 years. You set price targets, not predictions, targets. At X, I buy a small position. At Y, I add. At Z, I double down if the thesis still holds. You turn off the news. Not because it isn't happening, but because the news describes what already happened. The price already reflects the headline the moment it breaks. You can't trade yesterday's news. You start looking at earnings instead. Cash flow, balance sheet strength, Debt-to-equity ratios. Companies with fortress balance sheets, zero debt, significant cash reserves don't die in recessions. They acquire the ones that do. 3 months in, you've deployed 30% of your cash into positions at prices you never would have gotten in a bull market. 6 months in, the panic begins to fade. Institutions start rotating back into risk. The indexes stabilize, then inch upward. Your portfolio looks different than it did before the crash. Stronger, more deliberate. You didn't just survive the chaos, you used it. 12 months in, you've outperformed the index. Not because you're smarter than the market, because you were patient when everyone else was scared. Here's what nobody tells you about getting good at this. You stop feeling the highs. The first time your portfolio recovered after a crash, there was a rush, relief, pride. You beat it. The second time, less. The third time, you barely notice. You just check the number, make a note in your spreadsheet, and go to bed. The market becomes something mechanical. You've seen the patterns: fear, capitulation, recovery, rotation, repeat. It doesn't scare you anymore, but it doesn't excite you either. It's just a system. You've become part of that system, and you realize, sitting there in the quiet after the chaos settles, that the investors who truly thrive in market chaos aren't the ones with the best information or the fastest internet connection. They're the ones who remove themselves from the emotion of money, who learn to treat a red portfolio with the same detachment they'd treat a cloudy weather forecast. Noted, accounted for, moved on. That is the real edge. Not an algorithm, not insider access, not a secret indicator that only the wealthy know about. Just patience, discipline, and the willingness to buy when every instinct in your body is screaming at you to run. The market is chaotic right now. That is not a problem. That is the opportunity. The only question is whether you're going to spend it watching the screen or making a move.